Allstate is an insurance company, and overall, I like investing in insurance companies. Inherently, these are attractive businesses. I'll get into that as they look at their financials and describe why insurance companies are just really desirable. Warren Buffett has invested in insurance companies for a long time, and I think you'll see why. Allstate is been performing well for the last 5 years. If you consider that the insurance business really had to deal with increasing rates of insurance due to greater expenses that they had in their businesses. Car values, home values had really gone up, and insurance companies were really losing some money um, about 2 years ago. They've been able to adjust their rates and really got their profitability back. And that's really created a nice rally in these stocks. So if you look at Progressive, Allstate, the stocks have really performed nicely over the last couple of years. Will that rally continue? Well, it's going to be based on their fundamentals. They are a 50 billion market cap company with revenues about 64 billion, and they have PE of 10.42 in the forward PE. That's nice and low. It's good to see PEs that are nice and low. And dividend is around 1.93%. Analysts like Allstate and they think it's a buy, discounted by about 13%. The company has been doing well. And to show you the company further, I wanted to take a look at their overall financials that were provided in the earnings call that was announced on February 5th. The company overall top line revenue, they grew their company by 11%. That's really good. And they've remained profitable. They actually expanded profits, which is really good as well. The company has improved their profitability over the last 2 years, as mentioned. And I wanted to show this in the graph that they provided in their earnings. A couple of years ago, their expenses exceeded their revenues in several categories of insurance, but they've been able to bring that down and are now effectively selling policies where they are profitable. And we've really seen that in places that have high home prices, the adjustment on auto insurance. That's what we're seeing here in this graph. So the companies, so long as autos don't go up too much more in value, which I don't think they're going to, and home prices, the home market continues to go up in value, but I think that's also slowing down. So I expect they're going to maintain profitability going forward. The fires in California made a lot of news, as it should have, and the fires really damaged a lot of homes, destroyed a lot of homes. So the insurance losses are going to be really high. And Allstate does have exposure to California, and they did outline it. And basically, they're going to be losing about $2 billion due to California. So they're putting that into their financials. Good to see that. And that basically is somewhat put away from a risk perspective. They effectively were able over time to reduce their exposure to California over, looks like, a 15-year time horizon. They were able to go from 12.6% of their net policies were written in California. Now it's down to 5.8. So I think part of that strategy is what limited the losses due to these fires. And I live in California. I own multiple homes in California and can tell you that insurance companies have been raising rates quite dramatically. And they've actually left certain markets in California. And that's really created greater prices, higher prices for consumers. And the reality is that consumers have to pay it because you have to insure your home or really run a high risk. So overall, Allstate, very well managed insurance company. They kind of saw this as a major risk item, as they should have. They took the right steps. And now that a really bad event has happened, it's not going to overwhelm the company, drive them into bankruptcy, make them insolvent. Instead, it's a reasonable loss that could be absorbed by the business. And really, the California fires are not a risk item that's going to affect the company fundamentally. One of the aspects of insurance companies that makes them really attractive is that they issue out policies, and people, consumers, businesses that buy those policies pay an insurance company the premium. And the insurance company gets to invest that premium for the duration of that policy, having the money ready should they have to pay out on certain claims. Now, with higher interest rates, which we've seen in the treasury markets, insurance companies are going to make more money. And this chart shows that over time, Allstate's making more money on their investment income. It's one of the things that not, higher interest rates is not a bad thing for everyone. Certain industries are really hit with greater expenses, inability to fund projects, but insurance companies are probably okay with higher interest rates because they get to earn a higher interest rate, and that's directly going into their income statement in the form of profits. 16 analysts cover Allstate, and in general, they're very positive on the company. They have a 13.67% discount on the stock with a buy rating. And the most optimistic analyst believes the stock could go up to $267 per share. It's a very good appreciation rate. Worst case scenario, it would only drop probably less than 5% if you saw the worst case scenario analyst. So overall, it's pretty stable stock that has a lot of favorable expectations from analysts. As we look at the growth rates, they're expecting to grow in 2025 by probably a high single digit, and then 26 high single digit, and then low single digits in 27 and 28. The earnings per share is expanding nicely. It's going to grow 11.6% in 2025 and then 11% in 2026. That looks great. So I've got some new financials, got the earnings released. I listened to the earnings call. Now it's time to update my valuation on Allstate. In my valuation, I'll start with the conclusion. I think it's a buy and it's discounted by 40%. Why is that? Well, their cash flows are really good. If I look at their cash flows, the stock is worth 47% more than its current stock price. So that looks really good. I think their earnings per share look fantastic. And when I use just a 12 PE based on the expected earnings per share in 2025, it's discounted by 27%. So both look really good. Analysts on stockanalysis.com had the stock as a buy rating and had a discount in the mid-teens. So it's a stock that has, I think, a lot of credibility. Their stock's been rising nicely over the last 2 years. I think it's going to continue to perform. So overall, very positive on Allstate. And last comment on the company, this company, and as well as some others that I own, they are in really good partnership with stock investors. They put out information that I think is the most relevant information stockholders want to hear. And they really communicate really well with stockholders. I'd like to say that about them. So that's my analysis on Allstate. Hope you found it interesting. Love to see your comments on this video on what you think of Allstate, what you think of the insurance business. With that, let me wish you the best of success in investing in 2025.